All right, everybody. Hi, good afternoon. Welcome back into your next breakout session. Y'all, this is a biggie. Down payment assistance panel. You are going to get some amazing information. I see everybody in the chat that is signed on. I want to give you guys just a couple of minutes to make it back to your computers. So thank you all for joining us. We're going to jump right in because look, let's just be clear. One of the biggest hurdles when it comes to buying a new home, especially for first-time home buyers, is saving up on our hard-earned cash for a down payment. Oof, Lord have mercy. You guys, with home prices skyrocketing, this is a bigger challenge than ever, right? Down payments can easily reach $10,000 or more, and that's not including closing costs, which can honestly be another 3 to 5% of the loan amount. And I don't know about you, but maybe you've heard the myth that you need 20% down to buy a home, or that the only option for a loan down payment is an FHA loan. Well, today we are here to debunk these myths, okay? We want you to walk away here with the truth and the facts. We're going to share some incredible resources with you about programs that can make home ownership way more accessible. I can't wait to dig into this topic because I think so many people count themselves out before they even know the resources that are available to them for assistance. So allow me to introduce our panels for today's discussion. I'm going to bring them in, then I'm going to allow them to share a little bit more about themselves, and then we'll jump right into our questions. So I want to bring on Alejandro Rodriguez, Tammi Southall, Gracie Perez, and Lisa Johnson. Hi, you guys. Thank you all so much for being here today. We cannot wait to learn all the goodness that you all have for us. How are you guys doing today?
Pretty excellent. Thank you.
Great.
All right. Sounds good. Okay. So Alejandro, I'm going to start with you first. You are the community lending officer with Bank of America located in DeSoto. You guys are on a mission. Y'all are on a mission to help 60,000 families and individuals achieve home ownership, which is great. Tell us just a little bit more about yourself, Alejandro.
Certainly. Here, born and raised in the Dallas area. I actually grew up in the Oak Cliff area.
Okay.
That's where I managed the majority of my business for the last couple of years. But as of recently, I'll say, well, it's not so recent, around 6-7 years back, I moved over to the DeSoto area. I live in DeSoto now. And my financial center is actually in DeSoto as well. COVID, such a change to all of us, right? So it was a few years that I was actually out of the office, and just this March, I started back in the financial center here in DeSoto off of Pleasant Run. So if you all ever need a face-to-face live conversation, I'll be there for you all. But yes, work for Bank of America. My title is a community lending officer. My NMLS is 621644. And really our objective is to help individuals become homeowners. I mean, that's simple, right? There's a couple of things we have to look at, but at the end of the day, just make it easy, put the path forward, and help those individuals become successful homeowners.
I love that, Alejandro. Thank you so much for joining us. And I love the fact that Bank of America has a $15 billion home ownership commitment to helping those families achieve home ownership. So that is awesome. So a lot of resources there. I want to bring on Tammi, who is the housing project manager at the city of Dallas, where she oversees the Dallas Homebuyer Assistance Program. Hi, Tammi.
Hi, how are you? And I want to say hi, Sora.
Hi, Sora. Look, I felt it. I felt the energy. Yes. All right, Miss Tammi, tell us a little bit more about you as well.
Yes, ma'am. I'm not from Dallas. I'm originally from Houston, but I've been in the affordable housing arena for about 11 years, 9 years here with the city of Dallas. We are working hard every day to try to get low to moderate income families into some affordable homes. So we are excited and happy to be here today.
Yes, this is going to be a good one. Thank you so much for joining us. Miss Gracie is the producing branch manager for Cardinal Financial and an approved lender for Texas State Affordable Housing Corporation. How are you, Gracie?
Hey guys, I'm proudly representing TSHAC this time. It's an honor. My NMLS is 466273. I speak Spanish and I'm fully bilingual. I have a team in Dallas and all of them are bilingual. My number one goal when I meet with a client or a family is I want to know their story. I want to get to know them, and I put myself in their shoes because I'm also a buyer. that's how I'm able to guide all my families. Once I put myself in their shoes on their side, then I'm able to guide them as if I was myself buying the home for them.
I love that.
So
Thank you so much.
You're welcome.
We definitely appreciate you being here today. Okay, I have to ask you a question before I get to Miss Lisa, because here at the Habitat Home Ownership Fair, there are no dumb questions. Okay, we encourage, and so I'm going to ask the question. I've heard two of you give some NMLS number. What does that mean?
That's our license.
Okay, so that's your identifier number. Okay. Look, you guys know your number really quick, so it went really fast, and I'm like,
Yeah.
okay, maybe that's something I need
that's
to
our
know.
license. Yeah.
Okay, that makes sense. See, I'm going to ask the questions that you guys were wondering and didn't put in the chat. It's okay. And then we have Ms. Lisa Johnson. She is the Home Ownership Outreach and Business Development Officer for the Texas Department of Housing and Community Affairs. How are you, Ms. Lisa?
Fabulous. How's everybody? Thank you for joining today. It's such an honor to be part of this great group. And I have to give a shout out to my people at Dallas Habitat. They do a great job. And whether they, you build a house with them or not, they are, talk about being there for you.
Yeah.
That is their mission, and to help more people own homes. And so you've done yourself a big favor by being here today. So just want to say congratulations.
Absolutely. So for my panelists, I'm going to pose a question to one particular individual, but we're all here to help. So feel free to jump in. We're one big happy family. So whenever you want to chime in on a question, please feel free to do so. We're going to jump right in. I'm going to start with Alejandro. Alejandro, let's go ahead and get into it. How does down payment assistance work?
Absolutely. So the beauty of this is that it's just what it sounds like. Whenever you're purchasing a home, typically there's going to be monies that you need to be able to purchase the home, whether it's for the down payment itself or it's for the fees, the costs that are associated with it. We need money to purchase that home. So down payment assistance is what it sounds like. It's an assistance in reducing the amount of money that we need to be able to purchase this home.
Nice.
So
Okay.
it's pretty straightforward. There's assistance that's offered sometimes internally through the lenders themselves, and sometimes there's assistance that's offered outside of the lender that's actually doing the loan. So we might be able to partner with what we call a down payment assistance provider that might not necessarily be the lender.
Okay. Perfect.
Is that
Perfect.
clear up there for you?
No, that was perfect. But so with the program, there are requirements and limitations and things like that, depending on where you live.
Correct.
Certainly. So what goes on with this is that the majority of the loan programs, whether it's through Bank of America or any other lender, when it comes to the need, right, what money do we need? Typically, we're going to need money to cover the down payment and again, the fees. Those fees, the down payment itself, just the down payment typically is going to range, and this is on a lower amount than it was before. Typically, we're going to need about 3 to 5% of the purchase price as a down payment. That's without the help of anybody, right? We're getting this out of our pocket, and then there's fees associated with the process itself. So on a regular basis, if you're purchasing a home and you're not getting assistance from no one, you're probably going to need around about 7 to 8% of the amount that you're purchasing to cover the need, right? The down payment and the fees. So we know what's going on in the market. Houses have gone up significantly. So let's say that you're purchasing a home for $300,000, right? Just putting that number out there. On $300,000, if we're looking at 7 to 8%, we're probably looking at close to $20,000 out of our pocket to be able to move forward, where it's really a big number. What's going on with the down payment assistance program is that depending upon where you're at geographically, depending upon the income and other factors as well, like we mentioned earlier, including Bank of America and including our partners out here, we have the ability of reducing those funds significantly. Just putting it out there, right? Bank of America, we do have up to $17,500 that we can help with. In that same scenario that I mentioned earlier, you're buying a house for $300,000, you need out of your pocket close to $20,000. If we have the ability just internally through Bank of America, we might be able to reduce that number to needing $4,000 or $5,000 out of your pocket instead of $20,000, which is a significant impact when you're looking at thousands upon thousands of dollars. I know that myself, right? Since I work for a lender, I've worked for Bank of America for going on 20 years. It's always save, save, save. And you need to drill that into your head. You need to change your lifestyle. but it's a challenge saving $15,000-$20,000. It's not easy. It's doable, but realistically, it's not that easy. So the fact that we're able to save some money, and then we have other folks helping us out on being able to cover that gap, that's where the key comes in. And that's what we're going to talk about. What is it that we do? What is it that's required from the individual? And if we're not there, what can we potentially do to be able to help that person? So yes, it is going to be based upon income. It is going to be based upon where you geographically are purchasing your home as well.
Okay, great. I appreciate that. So Tammi, let me ask you this. When it comes to the down payment assistance programs, we're debunking myths today. Is it only available to first-time home buyers? Because I think that we've heard this rumor before, but I want to know if that's true or not.
No, it is not true. You could have owned a home within the last 3 years. If you had owned a home within the last 3 years, that's still considered a first-time home buyer. So it is not true. You have to be a first-time home buyer.
Okay. And so what are some of the factors that play a part in being able to qualify for the down payment assistance programs?
Each program is different. With the city of Dallas, we cater to the low to moderate income home buyers. So those will be home buyers whose household incomes are at 80% or below the area median income. We also have an additional program where we target certain occupations who are working and serving the community where their incomes are a little bit higher. Occupations such as educational instruction, teachers, or nursing, or those that are in the healthcare field, those that are in protective services like fire and police. We offer assistance for those. Their income range have to be above 80% of the area median income, but not more than 120% of the area median income.
Okay, so income is one of the variables. Your profession,
purchase price limits.
Purchase price limits, that is correct.
Mm-hmm.
There are purchase price limits with the city's program because we are federally funded. So there are purchase price limits that come into play with the city's program. So yeah, and again, with the city program, you have to buy in the city limits of Dallas.
Okay.
So you can't go outside of the city to purchase. It is strictly for those who want to buy within the city of Dallas.
And that was also interesting that you said that if you haven't owned a home in the last 3 years, you're considered a first-time buyer.
Yes.
Correct.
Wow. Didn't realize that. Okay. Lisa, let me jump to you really fast.
Sure.
Is down payment assistance free, or are we making a payment into something and then applying for the down payment assistance?
So I'm going to sound like an attorney now. It depends. It depends. There is free money out there. Usually you'll look for the words gift or grant. A lot of times those are what we call layering, almost like making a lasagna, layering funds. Habitat is the master at that. They layer gifts and grants from a variety of sources for the borrower's behalf with loans. And sometimes the loans are 0% interest. And sometimes the loans carry interest rates. So the answer is sometimes, and try not to be overwhelmed with that because there's a lot of acronyms and a lot to learn on the subject. And so that's what your lenders are there for, to really dive in, and your realtors and your housing counselors to help, and us too. We're the state of Texas. We're not just giving out billions of down payment assistance. We're here to help educate home buyers learn how to buy a house, whether they use our funds or not. So sometimes it's free, but it could come in the envelope of a higher interest rate, for instance, for your first lien mortgage. Usually it's not really, really free, but sometimes a little bit is.
Okay. So one of the keywords, I'm going to throw out some terms to you and you can kind of explain to me, because when it comes to these assistance programs, we've all heard these different terms. So you said looking for keywords like gifts or grants, that doesn't need to be repaid. What about a deferred loan? I've heard deferred loan.
Good question. So deferred loans are what we call deferred repayable usually. Sometimes they have a feature that they're forgiven at some point. For instance, our programs have a 3-year forgivable loan. So after 36 months is up, your down payment assistance loan, which is a loan, it's a lien, a second lien on your house, is forgiven. It goes away forever. That comes with a slightly higher interest rate because it is more risky to investors. We also have a 30-year deferred repayable. And what that means is there's no monthly payment required. It's 0% interest, just like the Habitat loans. At some point, we call it like the grandpa's loan. Grandpa says, yeah, baby, I'll give you some money for your down payment, but just pay me back one day. It's how the state of Texas recycles money and helps somebody else. So if you refinance, sell your home, or pay it off in 30 years, that money comes back to the state. So, but there is no monthly payment required. So that's what we call deferring, having to repay that.
And then you brought up the word forgivable. We've heard that too. Forgivable loans. I see that on TV, and we all need a little forgiveness, but I need to understand what that means.
Yes. Other people may have some more things about that. It requires a lot of, in my opinion, I was a loan officer before for 10 years. I'm still a licensed realtor. It requires pulling all your resources together and really invest time to figure out what's best for you. All of us have something in our bag of tricks. City of Dallas, T-Shack, we have just slightly different things. And you've got to figure out which one is best for you in your situation at this time.
Okay, perfect.
Everybody's got a different opinion.
Yeah, a different opinion and a different approach because we all have different situations, like you said. No, I appreciate that.
Right.
So, Gracie, let me ask you really fast. Just like other types of assistance, we know there can sometimes be stigmas attached to programs that can provide critical financial support. So, in your opinion, does using down payment assistance make a buyer's offer less appealing to a seller?
Absolutely not. And I'll tell you why. It's an advantage that any buyer that's using down payment assistance and it's working with the right team, it's a huge advantage to their offer. Now, I have to highlight that working with the right team, a knowledgeable team that knows the guidelines, knows the products, that's able to guide that family through down payment assistance, I am able to close families within 2 to 3 weeks using, T-Shack. So as long as you're working with the right team, with a knowledgeable loan officer, you're going to be just fine. We don't have to disclose to the sellers or the listing agent if my family is using down payment assistance or not. If anything, it gives the buyers more power because now they have extra assets to offer in this competitive market. Now they're going to have extra money to submit an offer with an appraisal waiver. What does that mean? It means that you're guaranteeing the seller extra money for the house if in case the appraisal comes in a lower amount versus what the seller really wants for the home. So absolutely not. As long as you're working with the right team, as long as your team is guiding you through the process. So I'm representing T-Shack, but I'm also a loan officer. T-Shack has, and just like TDHCA, they have amazing programs out there. So T-Shack has a grant. So you qualify for that grant. I put you through my qualification process. I need a credit score of 620. As long as everything matches in there, then I'm able to set you up with a grant, FHA grant. You don't ever have to pay it back. We do recommend that if you're going to use the grant, you stay at the house for 6 months, but you can sell it and you don't have to pay that grant back to T-Shack. Now there's a second option. You can then qualify for the 3-year deferrable second lien. So that means that you have to stay at the house for 3 years. If you sell, refinance that property, you do have to pay a portion back to T-Shack because then they went the extra mile to help you get into a home with down payment assistance. and you're turning around and refinancing it for a lower interest rate, or you're going to sell it and cash out on that property. So there's two types of loans that the families can take advantage of. Number one is a grant. You don't have to pay it back. As a loan officer, I do ask that you give us at least 6 months. It all has to do with the investors. Or the second lien, you have to stay at the house and live there for 3 years. After 3 years, then the lien is forgettable and you don't have to pay it back.
And sometimes we hear terms like 6 months and we think, oh my gosh, why does it take so long? I'm going to say, again, today is all about changing our mindset and our perspective. Look, that gives you 6 months to continue with your savings. It gives you 6 months to continue improving your credit. It gives you 6 months to kind of get ahead of the ball. And again, it's different with every program, but I know when people hear certain terms or certain numbers, you're like, oh my goodness. But so we have to just flip the way that we're thinking about it and use that as time to continue building. Now, I want to do a quick deep dive into each of your respective programs to learn a little bit more about, how they work and who qualifies. Because like you said, there's different scenarios for different people. So everybody needs something different. So I'll start with you, Alejandro. How much can buyers receive through your program? And I'll have everybody answer that question.
Certainly. So Bank of America has up to $17,500 that we have the ability of assisting our clients with towards the purchase of the home. There's two programs particularly. There's one program that we call America's Home Grant. America's Home Grant is an exclusive program through Bank of America. We have the ability of offering it pretty much in all our lending programs. What it does is that it gives us the ability of covering expenses that are typically associated with purchasing a home, whether it's title fees, whether it's points even, any fees, third-party fees and lender fees that are associated with the purchase of the home, up to $7,500 we'll be able to cover. Typically, what I see, fees come out to be around less than $7,000 typically. So we're left with money. So instead of that money going back to Bank of America's pocket, what we typically do is that we use that excess money to be able to buy down the interest rate permanently. In addition to that, we have another program. It's called Bank of America's Down Payment Grant. It gives us the ability of helping our clients with 3% toward their down payment up to $10,000. 3% up to $10,000. So combined, which we do have the ability of combining them, we can help with up to $17,500. Now, America's Home Grant, that program is available in the majority of the United States, almost throughout the whole U.S. The down payment grant, where we help with the down payment, that is in major metropolitan areas that we're focusing on. The DFW, pretty much the majority of the DFW counties we're going to offer, Plano, Collin, Dallas County, Rockwall County. The only exception is that we don't offer the down payment grant in Tarrant County. We can help with the closing cost part, but not the down payment. It is going to be based geographically upon where you're purchasing your home at. It is specifically targeted to quite a bit of folks, right? But it has an emphasis on the low to moderate income segment of the population. So it is income-based, and it is property geographically where the property is going to be located at based on. In the county of Dallas, because that's where we're at currently, at the time being, if the individual makes $70,652, it's an odd number, it just got updated a few days ago, 80% of the area median income, $70,652. If my applicant, again, this is a huge thing, not household income, but applicant income, the person that's in my loan makes $70,652 or less, in the majority of the areas that we offer this program, will automatically qualify for both. If we're purchasing a home for the purpose of living inside of that residence, it's not for investment. If the property is located in a low to moderate income census tract, there's quite a bit of those sections throughout the Metroplex, then the income of the applicant can be up to 150% of the area median income, which currently is $132,473. $132,473, which is quite generous considering the restrictions that are sometimes applicable with down payment programs. The fact that we're looking only at applicant income and not household income. The best thing to do, obviously, without any fees, any type of commitment, as you'll probably hear us say from this point forward, right? We're going to share the information, but the reality is that you have to sit down with a trusted lending officer, a trusted real estate agent, somebody that's going to go through the whole detail with you all and explain what exactly it is that you're going to benefit from, and what it is that you have to look out on that part.
Very good. Thank you
That's
so
what
much, Alejandro. So it's funny, Lisa earlier mentioned like keywords to listen for, gifts and grants. So as soon as I heard you say grant, it's like my ears stood up like, oh, okay, I hear grant now. So now I know some of the different terms that I didn't know before. Okay, Miss Tammi, what about you? How much can how much can buyers receive through your program? And of course, I know it's dependent upon location and some of these, funds can be combined.
Right, exactly. So our program is, our funding is considered a forgivable loan. It is based on household income. Now it's depends on where you purchase. So in the city of Dallas, if you purchase or if the purchased property is in a census tract where the poverty rates are 20% or below, you have access or you can get up to $60,000 in assistance. Anywhere else within the city of Dallas, it's up to $40,000 in assistance. And that assistance will cover down payment, closing costs, and even principal reduction. Earlier, I'd heard, I was listening to some of the earlier sessions, we talked about the amount, what percentage of your income you should be making a housing payment. So with the city's program, we go up to as much as 32% of your monthly income into a housing payment. So you can use our assistance to buy down that loan to make it meet to that 32% housing expectation. So with our program, it is, like I said, it is a forgivable loan. It is a second lien. Second lien is placed on the property. It is the residency term can be anywhere from 5, 10, or 15 years, depending on the amount of assistance that you receive. Once you meet the residency terms on the loan, well, let me back up. There's no monthly payment on our loans. There's no interest on our loans. Once you meet the residency terms, and you're here in our world, affordability period, those loans are totally forgiven. But if you happen to sell the property, transfer, whatever reason, it's no longer in your name, the property, and if you do it prior to meeting those residency terms, then you would repay the balance due on the loan.
Okay. And then what in respect to certain areas, location? Yes.
So again, if you purchase in high opportunity areas, and those are where census tracts where the poverty rates are 20% or below, you can get up to $60,000 in assistance. Now we do, the assistance is based on need. So you may not get the full 40,000 or you may not get the full 60,000, but those are the maximum amounts. Some people utilize, can get to where they do need the full amount, but then sometimes people only get what they actually need. But it is maxed out at either $40,000 or $60,000. For our targeted applicants, targeted occupation applicants, they can get up to $45,000 in assistance.
Okay. Thank you so much, Ms. Tammi. I appreciate that. Lisa, tell us about TDHCA and how much buyers can receive through your program in respect to location.
Absolutely. Thank you. So one question we get asked a lot is how do home buyers access this money? Like, how does it work? And so sometimes we forget talking about all these terms and how much you can have. How do you get it? So through our programs and a lot of programs, we work through a list of approved lenders. We have thousands of approved lenders in different counties. You can search on our website for who those lenders are. We suggest that you interview several to find a good match, find someone that communicates with you, that calls you back, that listens to you, and you feel heard with. And you will work with that lender to qualify for a first lien mortgage. To Alejandro's point, that's one of the first things you need to do, whether it be get with a housing counselor, Habitat, people like that can get you ready if you're not ready. But you need to get pre-approved with an approved lender. Once that happens, the lender's going to take the ball and run with it. And we don't accept applications directly from the public, but as the state of Texas Housing Finance Agency, we're always here for questions. And we get calls from people that just say, hey, I'm not quite understanding this. And my loan officer is not, I don't know, I don't feel like I'm quite understanding and can't get them on the phone today, but can you help? So we're always doing that kind of stuff. So long story short, you don't make application for the down payment assistance with our agency, but you'll do it through your lender. And they'll use our rates. Our rates are published on our website every day. Everybody can look at them. They're fully transparent. You can check in as a home buyer. Hey, are these rates competitive to other rates? So you can make your own decisions. So your lender's going to use our rates for FHA loan, VA loan, USDA loan, or conventional, whatever you decide with your loan officer, what's right. So they're very competitive. We have bond rates, which it's a whole big subject, but basically we go to a different group of investors that are willing to invest in affordable housing for a lower potential interest rate, in addition to open market rates.
You know, Ms. Lisa, one of the things that you said that was really important, you said when you're talking to lenders, you need to interview the lenders, find a good match, make sure they communicate with you well. And I appreciate that. And I'm going to tell you why, because I don't think often we're given permission to do these things and go through a process. We feel like the first person we meet is the person that we have to go with. And we just have to go through it's almost like, getting into a relationship or finding a therapist or whatever it is that you find. There has to be a good match, because this is a huge decision. So I'm so glad you said that, because all lenders are not created equal.
No, and they're educated at different levels, and they have different styles of communication, and they're working for you as a customer and need to earn your trust, and they need to be as educated as you require them to be. So
that's good.
Sometimes it's like a teacher at any given school. Sometimes you say, oh, that's a great school, but what about the teacher?
That's so good. That's so good, because again, what I need as a buyer may not be what Alejandro needs as a buyer. We're looking for different things. I may like a certain style of communication. He may like something else. So yes, you guys, please interview. This is a game of comparison. Even if you love the first one, talk to somebody else just to compare, to see like, okay, I was spot on, and not just excited about my first lender.
Yeah. And sometimes people aren't quite ready today. They need to do a little bit of work on their credit report or something. They may have a challenge that needs work. And so there are some loan officers that are like Alejandro that are much more poised and ready to help that person get ready. And they know that eventually they will come back to them. And that's what you need. You need a partner to help you.
That's so good. Look, I remember in college, I took an algebra class, and seems so off subject, but it's going to make sense. My teacher was brought in because I guess whoever normally taught this low-level algebra class, they couldn't find the professor. So he was like a higher level. He wasn't for me. Okay. He was too far advanced. I needed somebody to literally stand there with me and tell me A + B = C. And so I wish I could have interviewed in college, but to your point, everybody needs something different for sure. We're all at different levels. So I want to ask you really quick, Gracie, what about your program? I know you mentioned a couple of programs earlier, but how much can buyers receive through your program, and can those funds be combined?
Okay, so TSHAC works a little bit differently. So it goes by percentages, right? The higher the sales price, the higher the percentage you can get, right? Now we have 2%, 3%, 4%, and even 5% of the loan amount. This is where I go back to Lisa's points. It is so important that you work with a loan officer who you make a connection with. This is why I like to know my family's stories. I want to get to know you. I want to get to know your needs and wants. And to tell you the truth, I put my families on a budget, on a diet. I'm like, okay, here's the guide that we need to follow so that you can become a homeowner. And maybe it's not this year, right? But yes, to answer your questions, it's by percentage based on the loan amount, based on your pre-approval. So you can get from 2 to 5%, depending on the sales price and the loan amount.
Okay, that's good. Thank you so much. Okay, so I'm going to throw out these questions from the chat. I don't know if you have your chat turned on, but the chat is going crazy because there are so many questions and you guys are giving so much great information. So whoever wants to jump in and answer this is fine. Which is a better choice, to borrow from a mortgage loan company, bank, or credit union? And do they all provide first-time homebuyer programs?
I would say customer service. It has to do with customer service. It has to do with personality. Once again, I have a buyer who was buying in Waco, and I am in Dallas, and he thought it was going to be not so local for him. So he ended up going with a credit union, and now he's back to me because of customer service.
Right. And it could depend on the loan products that any given entity, either any of us or the community bank, they could have a better option one place or the other. So it really requires extra work and investigation.
So how do you investigate that? Like how do people figure out which one is better for them?
Go ahead.
Go ahead. I'm sorry. I was going to say, I guess with confidence, and it just makes my life a lot easier. I answer to clients. There's two things that are going to differentiate between lenders. That there's going to be number one, the service, which is huge, right? Especially if you're a first-time home buyer. You might save a few dollars potentially, right, by shopping around. But the reality is that if you don't have that assistance and you don't have that expertise, somebody that's really going to walk you through the process, that extra dollar that you think you're saving might not necessarily turn out to be actual savings because there's other things out there that might have impacted you greater. On the flip side, you have those individuals, right, number one is service, and number two is cost. Bottom line, you're buying a house for a set amount. That house is $250,000. It doesn't matter who you go through with a lender. If you qualify, very likely you're going to get the loan. Now, aside from how they treat you on the service part, the second thing that you're going to look at is what they're charging you, right? What the fee is, what the interest rate is, what it's going to cost you at the end of the day. Because on the flip side, me personally, right, when I went through the refinance part, I had I contacted Bank of America and I contacted another lender. Now I'm gonna be truthful, right? The other lender treated me a lot better than the lender that I ended up getting here through Bank of America, my own company. But however, and I put the big but, yes, the service was better, but I knew what I was doing. I knew the fine points, so I really didn't need guidance. I just wanted hardcore data. So at the end of the day, when I looked at the numbers, hardcore data, Bank of America was better. So I ended up going the route where the pricing made more sense to me, and I not necessarily cared too much about the service because I knew what I was doing. But that's not always the case. So,
Right.
So the reason that I say that there's really no right answer. It's going to depend upon the individual. And again, where you're at. So I know some of these folks, and I know some of us have been homeowners before. We know what we're looking for. We're very likely going to shop around for price. What's the best price and what works for us specifically? Sometimes, however, we're not necessarily in that seat. We need leverage. We need hand-holding. So it really depends upon the individual's point of view and what's most important for them. Hopefully, they get somebody that gives them the best pricing and the best service. Magic fit.
I'd like to add, I compare it to the medical field, like when you're looking for, you're needing surgery. Let's say you need surgery and you can get a general surgeon, or let's say it's heart surgery. And you think, or let's say you're going to have your appendix out. That's supposed to be just a minor, anybody can do that kind of, not anybody, but any surgeon can do that surgery. But if you're in the middle of surgery and something comes up, you want somebody that's really qualified, because there are comparisons in the mortgage world, in the housing world, buying things. There on almost every transaction, something's going to come up that's going to require some maneuvering, and your professionals, if you get the right person, is going to know how to handle that and keep moving to closing. So you're looking for somebody with expertise and really knows what they're doing and knows these down payment assistance programs, because it will benefit you in the end.
No, that's really good. I also in the chat, Blaine put how housing counseling programs can help connect you with all of these programs and determine which option is best for you too. that is why connecting with Dallas Habitat and these type of resources is so important. It's like getting a mentor, right? When we're
Yes.
young, we tell our children to get, go get you a positive mentor, somebody that can help you, and that to me, I think that we forget how important mentorship is, and having somebody like Dallas Habitat to say, okay, these are the questions you need to ask. This is what you need to look for. And I think somebody put in the chat earlier, which I thought was a really great question. Kaylin asked, when you are interviewing or trying to figure out which bank, which lender is better for you, what are a few questions you should have prepared when you interview?
Good question. I would ask how long, things beginning with how long does this process take? I would ask them questions if they're thinking about down payment assistance. And so that's what our topic is. Ask them questions that I want to call them trick questions, but questions like, is this going to take longer? A subject that we can talk about later is mortgage credit certificates, which is a whole big subject. I hope it's near and dear to me. It's a federal tax credit available only to first-time home buyers called MCC, or mortgage tax credit. There are a lot of loan officers that don't know much about that. And it is a extremely valuable topic for any first-time home buyer to at least explore. It might be a little bit more costly on the interest rate, and you might not want to do it, but it's a tax credit that lasts for the life of the loan, and which could mean, as an example, up to $60,000 over the life of your 30-year loan that you get as a tax credit above and beyond tax deductions. So dive into the down payment assistance thing and ask questions of your loan officers to see how much they know about that. Some loan officers will go, it's not important, or, oh, you don't qualify. And you might want to have somebody that supports you in at least knowing more about it. So.
I agree. I absolutely agree with Lisa. Mm-hmm. When I get a phone call from my buyers, they start asking me, what about TDHCA? What about, TSHAC? What about the other programs out there? What about city programs?
Right.
What about the local programs? What about Dallas Habitat? So you do have to ask the questions of the knowledge regarding the programs out there. Most loan officers are going to know your basic FHA, conventional VA, but not every loan officer is knowledgeable enough to be able to guide and get a buyer to the closing table with the rest of the programs that are being added to the actual loan. And I agree with Lisa, the mortgage credit certificate, MCC, it is a great tool, and it's free for our Texas heroes. So our Texas heroes are our police officers, our nurses, doctors, teachers. They all can get that mortgage credit certificate for free. Now, the ones that are not in that category can also get it, but it's a $500 certificate.
Gotcha. Okay. So, y'all, you have no idea how many more questions there are, but I'm going to try to get to this last one really quick because we have to wrap. We'll have to make this short and sweet. Can we combine these programs?
Sometimes. Yes.
Okay.
Yeah. I'm
try.
Okay.
Yeah.
Just knowing that it's possible is good enough.
Yes. And we all recommend each other. We all say, whoever's got the better thing, we're all here to help. It takes all of us to help everybody. So congratulations to everybody,
Yes. And that's what today is about. Congratulations in advance to everybody that's on today. I want to thank you, Gracie, Lisa, Tammi, Alejandro. And I love the fact that we have reliable, honest resources. That's another thing. When you're going out and shopping now, we've seen your face. We know your name. We know who you work for. So that we know that it's not about making a sale or getting this. You want the best for your customers. And I know that you do, because I know that Habitat wouldn't have you on if you weren't great and ethical and amazing people. So thank you for taking your time today. We are going to be dropping information for all of these programs in the chat box. So be sure to check them out. I need to see in the chat who is ready to count themselves in, start their journey towards home ownership, who is feeling inspired right now. Put some hand claps if you are, and hand claps for our panelists in the chat too. Thank you guys so much for taking your time, a wealth of knowledge. And I'm sure people feel so much better knowing that they can get a little bit of assistance with these down payments today. Thank you all. I really appreciate it.
Thank
Thank
you.
you.
Yes.
Have a great
So
weekend.
don't
Bye.
forget
Bye,
all the
everyone.
information on all the programs featured today, including program requirements and how to apply, is available in our virtual exhibitor hall as well. And after today's event ends, be sure to visit Dallas Habitat's website to access the program's booths to see if you may qualify or how to apply. Okay. Our next session is the one everybody's surely been waiting for as well. The Dallas Habitat team is going to be joining us here shortly at 2:00 to share how Habitat can help you realize that the dream of home ownership, you guys, is achievable. Okay. So if you're a first time buyer or prospective buyer, I promise you, you do not want to miss this because Habitat does so much more than what we realize. Okay. But first, I think we may have another raffle to announce. Let's see here. Okay, we're not going to go to that. Okay, and no raffle right now. Look, I'm reading my phone. No raffle right now. But 2:00, make sure you're logged back on at 2:00. We're going to be having our Dallas Habitat panel. Again, you don't want to miss that. And we're going to do our last raffle after that, after we wrap. All right. Thank you guys. I'll see you all in about 10 minutes at 2:00. Make sure you log in on time. All right. See you in a minute.